Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include the government shutdown's effects on the economy, my interview with new California MBA CEO Paul Gigliotti on his goals while in the role and how state and national organizations can work together for the greater good of the mortgage industry, and which way will bond yields go without the normal First Friday payrolls report. Looking for smarter home equity solutions? Established in 2016, Spring EQ is now one of the nation's leading non-bank home equity lenders, giving partners more ways to serve customers. Choose from a variety of products, including fixed line, their unique take on a fixed-rate HELOC, along with traditional HE-loans and HELOCs. Known for speed, service, and innovation, Spring EQ makes tapping into home equity easier. Learn more at wholesale.springeq.com. There's plenty of blame to go around for the U.S. government shutdown, but it is strengthening expectations for additional Federal Reserve rate cuts, which is exactly what President Trump wants. Markets are now fully pricing in an October move and giving an 88% chance of another cut in December. Delays and risks to the labor market from 750,000 furloughs make it more likely Chair Powell will push for further easing, even as inflation pressures from tariffs remain a concern. News informally broke yesterday that the FHFA, led by Bill Pulte, would force the closure of Freddie Mac's and Fannie Mae's New York offices in response to Attorney General Letitia James' quote, corrupt and dangerous business practices, end quote. Speaking of Fannie and Freddie, alternative procedures were laid out for mortgage lenders to follow if the shutdown hinders their ability to gather standard employment or income verification, as well as temporary measures for flood insurance verification. The new guidance issued by Freddie Mac still requires flood insurance for at-risk homes, but will allow mortgage borrowers to submit proof that they've applied for an NFIP policy, even if the policy hasn't been issued yet. When the shutdown ends, lenders will be required to verify that the borrower actually obtained flood coverage that meets standard requirements. The National Flood Insurance Program's authority to issue new policies has lapsed, complicating an estimated 1,400 property transactions each day, and leaving many buyers in high-risk areas without flood insurance coverage. Most existing policies remain active, include a 30-day grace period, and can be transferred to new owners. NFIP claims will continue to be paid, but uncertainty grows the longer the shutdown lasts, especially regarding how long buyers may go without coverage and how quickly FEMA's claims paying funds could be depleted. Ginnie Mae announced that it will continue to perform all functions necessary to ensure that the market is not disrupted during a potential lapse in appropriations. These functions include granting of commitment authority, support for continued issuance of Ginnie Mae mortgage-backed securities, taking all actions necessary to ensure timely payment of principal and interest to investors, and continuing to manage servicing of extinguished issuer portfolios. With the government shutdown, the Bureau of Labor Statistics employment data that normally comes out on the first Friday of the month is delayed, so traders are looking at the September ADP private sector jobs report, which came out Wednesday. Based on data from employers that covered 26 million workers, that's 19% of private sector employment, it showed the private sector shedding 32,000 jobs. And August was revised down from 54,000 gain to negative 3,000. The declines clearly show a slow and steady weakening labor market defined by very cautious hiring. But that's not all. The ongoing U.S. government shutdown has delayed key economic data releases, including construction spending, jobless claims, and the September jobs report, creating a data void ahead of the Federal Reserve's policy meeting at the end of this month. The Fed, for the time being, may rely on alternative indicators to guide its decision-making. Case in point, yesterday, the customary release of the weekly initial jobless claims report was not released, but the September Challenger job cuts report was, coming in down negative 26% year over year. The report isn't known for getting a reaction from the market, but given the current lack of official employment data, the report received some attention. If the government shutdown continues and deprives the Federal Reserve of key economic data, policymakers are still expected to follow through with the 25 basis point rate cut indicated in the September Summary of Economic Projections, as 1 month of missing data is unlikely to alter the broader easing narrative. Labor market signals remain mixed, with stagnant job openings, low quit rates, and job cuts still elevated by historical standards despite a drop in September. As Congress remains at an impasse and the Senate in recess, the chances of a prolonged shutdown are rising, mirroring the 35-day closure in 2018 and 2019. Markets are responding accordingly. Treasury yields have fallen amid the absence of official data and soft private sector indicators. The narrative right now is labor market fragility and fears of further disruption from potential mass federal layoffs. For today's interview, I want to welcome to the show new California MBA CEO Paul Gigliotti to talk about his goals while in the role and how state and national organizations can work together for the greater good of the mortgage industry. He has plenty of experience in the financial services and technology industries and has held about every single role you could imagine in mortgage.
But first off, congratulations,
Thank
Mr.
you.
President, as I've been calling you now for a little while. The news finally came out. We're now, and this will air tomorrow, we're now 48 hours into this. What is the feedback been like? What's it been like answering texts and calls? How do you feel now that this is you're actually president of California MBA?
I'm going to be very honest with you and truthful. I think what I've seen in response on social media, texts, and emails aligns with how I feel in life. And you have an experience, and you start to go down a path in your journey that is right for you. You feel that. And that's what my experience has been thus far as the CEO of the California MBA. Every response, every email, every post has, the communication. What I've received is, this is a great job for you. It's a perfect fit for your personality, for your skill set of understanding the entire loan life cycle from origination to mortgage-backed securities, to being steeped in technology, most recently AI, to participating in a nonprofit. I have my own nonprofit, so I understand how that world works. It's aligned with my goals for the industry. It's aligned with my passions for the industry, and I'm so honored to be able to take this step and continue supporting the industry from this position. So it's been a fantastic 48 hours thus far.
Good. I'm glad to hear that. I have a guest submitted question here from a Mr. Rob Chrisman.
Oh, Rob Chrisman sent you a question.
He said, "What did they ask you in the interview that helped you get the job?"
It was my smile. I think it was a compilation. I'll answer that question. That's a great question. I think it was a compilation of multiple questions and answers. And I think part of that had to do with, I've got a strong finance background. That's when I, left school, when I graduated. I was in finance and accounting. I have had a deep experience in mortgage lending, starting in a mortgage brokerage, then moving into a net branch. That's a scary word to say now, but back then it was a thing. Moving into an IMB, starting my own IMB, and then moving up to C-level executive. So really understanding the intricacies of mortgage lending. And that also compiled with my experience in technology, not only in mortgage lending, also out of the industry at Cisco Systems, but in the mortgage lending industry as well. I think the executive board, they saw this very well-rounded individual who I hope has a great reputation in the industry for being very passionate and dedicated to mortgage lending, as well as the purpose behind California MBA, networking, advocacy, and education. So I think to answer your question, or Rob's question, it was a combination of all of my traits and skill sets where they sat back and said, you really can't, that's hard to come by. I'm not saying I'm a diamond in the rough, but that's hard to come by, all of those varieties of experiences.
Well, Susan Milazzo definitely left an indelible imprint on the organization. She was fantastic. We wish her the best of luck in her next phase of life. How do you build on that success?
So she's one of the, I'm lucky enough to call Susan a mentor. I've got 3 in this industry. Susan is one of them. Chuck Iverson is another. And to be able to come in behind her in itself is something I feel very proud of. She has created something really out of nothing. She's created the California MBA into what it is today. And it's got such an amazing, stellar reputation. When I first started to go down this path, Robbie, of becoming the CEO of the California NBA, there was a slight fear factor that I had these huge shoes to step into. But now I'm taking it from the perspective of I must be able to fit into those shoes, or I wouldn't have been unanimously chosen to be the CEO after a long nationwide search that the association went through. So I know that I have her supporting me. We are lucky enough to keep Susan on for a year as a consultant. She'll be guiding me through the legislation and advocacy portion of the business, as well as supporting me with the events. So to answer your question, she's been amazingly, wildly successful. And I'm blessed to come in behind her and have her there to support me through my journey to ensure that I take that level of success and level it up, if you will. I think it's time for the California NBA to kind of break through the glass ceiling with what it is that we offer the industry. And I'm really looking forward to those next steps.
I want to talk about the communication between MBAs, because when I think California MBA, I think one of the top 2 or 3 state level organizations in the entire nation. There's a couple other big ones out there. And you've been a part of this for a while. There's the structure in terms of board members and that sort of thing in California MBA. What is the communication like with other states?
That's a great question. I get to experience that really at national, right? There's a couple of different meetings that we're going to and social functions that we go to as state associations. And so I'm really going to be able to dive in and figure out what that line of communication is. I've done some work with Joanne in Michigan, as well as Texas, TMBA, as well as Boston. But I really am looking forward to seeing how we all support each other. And in fact, Robbie, that's one of my goals for the California MBA in the next 12 months. I want to strengthen partnerships. We've got the California MBA is very tight with the national MBA, specifically on the advocacy and legislative side. But I also want to really strengthen our partnerships with the additional state MBA chapters, as well as other associations in the industry. And so that is a goal of mine. I'm glad you brought that up, is to focus on how we can all support each other. What one does really great, maybe another association needs additional support in. So I'll be keeping my eye on that, and I can respond to you specifically to what the communication looks like once I've got my arms around it.
Well, let's bring it up one notch, if you will. When you think about California MBA's relationship with the national MBA, you bring people inside the tent there. Kind of, what's that like? What do you hope for? How do you see that building? How do you see that partnership in general between California MBA and the national MBA?
Yeah, so it's really interesting. From what I've surmised, and I'm sure you see this on your side too, California is one of the largest states, right? It's this huge economic hub. And a lot of times what happens, even specifically in the housing industry, what happens in California with legislation moves up the chain to federal, right? And so that's where a lot of the partnership is. I think what I'd like to do is, obviously in this first year, I'm going to be learning a ridiculous amount of insight into legislation and advocacy. Where I really want to focus on that side of our association, as well as how it relates to the national MBA, is I really want to start ensuring that the communication regarding any legislative initiatives that are at the governor's desk or prior to going to, that the communication comes across to our members and the industry as a whole in a way that the industry can see how those initiatives or those bills affect their business directly. I think sometimes some things get lost in translation because it's almost like 2 different languages, Robbie. If you look at how bills are proposed and what they mean, that language is different to a CEO of an IMB or somebody that's in compliance of an IMB. And I also think that there's a way that we could provide not only the content of that information in a different manner, but the vehicle to get that content to our members. So that is actually another focus of mine this year. And I'm looking forward to partnering with the national MBA regarding that.
Well, you're preempting all my questions here because I wanted to close by asking about your goals. You mentioned strengthening partnerships, you mentioned communication. What else is kind of key agenda items?
I've got three. And the third one is member engagement. I have a lofty goal of, the California NBA has this brilliant, amazing community, and I want to expand that community, increase our membership. But within expanding that, I really want our members to feel engaged with the association and for them to have a strong understanding as to all the benefits that we provide. And Robbie, I'm not just talking about, our conferences, our networking events, our 3 under 35 or our future leaders program, but all the information, all the data that we have, I want to be able to provide that again to our members in a vehicle or a manner that provides it at their fingertips, because we're in a generation, we all talk about as mortgage lenders in our industry, we talk about meeting the demands of the consumer, and the consumers want what they want and they want it now. As a leader of the California NBA, our members have those same demands. So they want the information that they want, and they want it now, right? Because they're that consumer. And so I have this goal of trying to figure out a way to ensure that our members are provided with this information, whether it's legislation, advocacy, networking, kind of in an instance when they need it, where they need it, and for them to understand what it is.
I wish you the best of luck. It's always a pleasure talking to you. Hopefully I will see you soon. And sincerely, I'm excited for your tenure as president. Looking forward to it.
I appreciate it. Thank you, sir. I'll see you at National, right?
Correct.
Mortgage rates ticked up for the second week in a row after hitting the lowest levels since last October, a couple weeks ago. For the week ending October 2nd, the 30 and 15-year mortgage rates in Freddie Mac's primary mortgage market survey rose 4 basis points and 6 basis points respectively to 6.34% and 5.55%, and remained higher by 22 basis points and 30 basis points from a year ago. With no BLS September payrolls report, today's data are the services PMIs from both S&P Global and ISM, both due out later this morning. 3 Fed speakers are currently scheduled: New York's Williams, Dallas's Logan, and Vice Chair Jefferson. We begin the day with agency MBS prices unchanged from Thursday's close, the 2-year yielding 3.54, and the 10-year yielding 4.09 after closing yesterday at 4.09%. Let's wrap up with a joke and some housekeeping. I was standing outside a motel in a small town and saw an elderly man walking past. She hadn't had a customer in a while, so she called out to him. "Hey, would you like to have a fun time with me?" The old man said, "But I won't be able to." To which she replied, "I'll give it a try." So he said okay, and they go in. The old man strips down and performs like he hasn't done in decades. And for 30 minutes. When he's done, the lady of the night, all exhausted and tired, mutters, "But you said you wouldn't be able to." "Pay you," replied the old man. Thanks again to Spring EQ for sponsoring the podcast this week. It's one of the nation's leading non-bank home equity lenders, giving partners more ways to serve customers. Known for speed, service, and innovation, Spring EQ makes tapping into home equity easier.